Another wild and exhausting day on Wall Street for all our favorite AI stocks. I want to comment quickly on it just so you know what I'm thinking about the situation and what I'm doing next. First of all, Nvidia down another 3.55% after an amazing blowout quarter, one of the best quarters ever in the history of stocks. But it dropped a lot yesterday. You can see this here. It dropped 5% and now another 3% down from beginning of the week, 6.79%. And I commented already yesterday on it. This was the best thing that Nvidia could possibly have reported. And the fact that they are dropping like this with more news coming out. Yesterday I had a great video on Block where I discussed the Block situation. I got actually a lot of hate for that. That was very interesting for me. People hated me, some people, for that video. I reported on Block, the company of Jack Dorsey, firing 40% of the workers because of AI, with a very well explained rationale behind it. Of course, totally capitalist and cold-blooded. Jack Dorsey is not known to be a very empathetic person, but he sees it as his job to drive profitability. He sees the AI opportunity. He fired 40%. The stock went through the roof. Today up, I don't know how much, like a lot. And when I watched this whole thing and connected the dots, sometimes I'm also a little too analytical maybe. I watched the whole situation, see, look, the only reason Nvidia is down is because people are saying, well, it's all amazing. It's the best numbers we have ever seen. It's the best outlook we have ever seen. We just don't believe that this can be going on and on and on. AI is dead. It can't be. It is a bubble. Despite all the evidence pointing to the exact opposite. And that's what I explained yesterday. And today, when I looked at the fallout, in the comments of my video, but also all across X and CNBC for what happened. Look at here, Zero Hedge reporting on this Block situation. They're basically blaming Jack Dorsey for it, and everyone is mad. And 68 million on a party. Some people say with blow and midgets and stuff like that. I read this today. I don't know if it's true. But some decadent party, 200 days later, fire 40% of workers, blame AI. So there's a lot of emotion in there, and then people blame Jack Dorsey. And as I said, I'm not a Jack Dorsey defender. I'm not a defender of crazy, stupid parties. I'm not a defender of being tasteless, right? Throwing parties and then firing all your workers. It's just not good behavior. These are human beings. It's very bad behavior. But this whole emotional perspective on this forgets that the rationale behind it is very clear and very true. They can fire 40% of their workers because AI makes the others much more productive. And they will be able to fire another 40% probably this year because they become even more productive. And we see this across the board with more and more tech companies doing that. We see Amazon, we see Salesforce, everyone is like laying people off. It's obvious. And if you use AI, you know how serious the situation is, how empowering for the pioneers it is, but how destructive it is for the labor market. And a lot of people try to, point fingers and say Jack Dorsey is a loser and he's just concealing that his company is going down. He has to do these layoffs because I hate Jack Dorsey. But the stock is up. Analysts are not that stupid. Investors are not that stupid. They understand AI makes this company vastly more productive. They will be able to do much more now after firing the workers. And that is what's behind the AI boom. It's booming and booming and booming, and Nvidia, of course, is the main beneficiary of this. Here, I just showed the Zero Hedge. So here you see the post, Zero Hedge, saying, okay, they spent 68 million on the party, 200 days later, fire 40% of workers, and then blame AI. And you see here the overview of Zero Hedge. But that all of that does not change the fact that what is happening here is a massive increase in AI productivity by, fueled by the advancement in AI. And that is in the end what drives Nvidia's earnings. And that is why this stock behavior is just highly irrational. Now today, or was it today or yesterday? I don't even know, last night, we had another crazy news. The largest funding round in history, OpenAI, announces 110 billion funding round with backing from Amazon. Big backing by Amazon, by the way. Nvidia and SoftBank. So they closed the 100 billion. Amazon invested 50 billion. Nvidia invested 30 billion. And SoftBank invested 30 billion in the round, right? So that is now closed. Now let's discount the 30 billion of Nvidia. When I want to make the Nvidia argument here, that's back and forth funding. Some people circular funding. Some people say, but what about the other 80 billion? A lot of that goes to Nvidia. One of the big concerns, one of the fake excuses to drop the stock by Wall Street was, well, this can't be ongoing. And for example, OpenAI is such a big risk that they cannot pay Nvidia. So let's drop the stock. Well, guess what? That risk just has been taken off the table because OpenAI actually raised the money. All that speculation that they won't be able to raise the money, here you have it. They did raise the money, and only 30% is from Nvidia, or less than 30%, and the rest is from other people, and it will go to Nvidia, giant chunks. Another de-risking event for Nvidia, but still, we see the stock crashing again another day with absolutely not only no reason, but the opposite reason. It should go up. So what is going on? And we can, of course, as people who are very interested in Tesla, you see Tesla is also getting dragged down massively because of Nvidia. So we ended Wednesday quite high on 417 and then totally got dragged down here like crazy all the way down because, of course, Nvidia is a big chunk of the S&P and the Nasdaq follows it too. So what does it all mean for us? Here's the big picture. We know that Nvidia and the AI bubble scare keeps dragging the market down. And if we zoom out of the Nasdaq, what we're seeing is it's basically flat. I mentioned that before, but it's flat since September 22nd. Look, it was at 22,788 September 22nd. Now it's basically at the same level. We were straight flat for 6 months now. That is weird because if we zoom out a little bit more, see that since 2023, since the AI craze began, we saw a giant rally. But this rally was driven and is driven increasingly by completely blowout fundamentals. There is fundamental progress here. The economy is being transformed as we speak. OpenAI is going through the roof. Anthropic, the fastest growing revenue company in the history of humanity. This is all AI. And what do they buy? They're buying Nvidia. So we are seeing that trend that is driven by fundamentals. We saw the hiccup in April with the Liberation Day, then back on track all the way to September. And since then, we're going sideways while the fundamentals keep going through the roof. For me, that means the market is going sideways when the economy or the underlying stocks are actually keep rising up like crazy. And when we take a breather like that, it means we have to catch up to the fundamental trajectory of the real cash flowing into these companies at some point. And this sideways movement is not sustainable when the fundamentals keep improving as they do. So what I think that means, the longer we go sideways, the steeper we will go up and actually catch up to that trajectory that we saw before. So that is probably going to happen not too much later than next month, April, May. We can't go sideways forever. And in my opinion, that means we are not at the brink of a breakdown. We are not at the brink of crashing down, AI bubble popping, because there is no bubble. This is fundamentally driven. The opposite is true. We are moving towards an inflection point for the market where it starts catching up with reality again. So yes, we might keep going sideways. We might keep having volatility. We might even get dragged down a little bit more as a market, as the Mag 7. And of course, there are verticals and segments that are truly hit, like SaaS, software companies. They have a big problem, and many of them are not going to make it. But other companies like the Mag 7, the hyperscalers and the infrastructure companies, and companies like Tesla, I will get to Tesla in a second, they are in a very different position. So, in my opinion, there is no room to fall, not much more room to fall. And there is a forcing function to the upside for these key companies. So that is how I see that. On the Tesla side, I have actually more concerns because Tesla is not in a good position on the fundamental level. It's not Meta. It is not Nvidia. It has problems. And the reason everyone is so bullish and gives it an extreme PE ratio, 374, as opposed to Meta being at 24. Like, think about that. Meta forward PE is 24, current PE is 26, and Tesla's is 374. That is crazy. But it's actually not crazy because we know why. Robotaxi and Optimus are the biggest cash cows ever once they get unlocked. And so the question is, when will they get unlocked? And the problem is pretty much definitely not in March. And so it's about the carrot that we are dangling in front of everyone. And the moment of truth will come in April and May, because I'm not the only one who says, well, the cyber cap is kind of a necessary checkpoint and waypoint for Tesla. And once we reach April and go into mass production of cyber cap, a potential inability to deploy that cyber cap because of a potential time lag of FSD capabilities, the ability to actually deploy these things commercially, will become extremely visible. And that is, of course, very dangerous for the stock. So with Tesla, we are definitely entering, number one, in March, another continued weakness phase, especially if the market keeps being difficult. But we have a decreasing probability that it stays difficult because it has to go up, the market. But Tesla has weakness in March. In April, it's showtime, it's showdown time. Right, and that is the problem. If your risk appetite is limited, April and May could be the inflection point. The stock could go to 600, 800, or we have a big problem because robotaxis fail to scale and cyber caps keep basically piling up and can't be deployed. These are the two scenarios. So it's a very binary situation. And of course, we know how it goes. If it gets delayed and the cyber caps start piling up in the parking lots, there will be panic. But then we have another care, and it's like, well, now they're piling up, but at some point they can't pile up forever. So maybe it's June, maybe it's July, and then the story continues. But I tell you guys, it's going to be tough for the stock if that happens. And this definitely can happen. So it's all about observing what is going to happen April and May. Whatever happens, March, I have concerns that we go into tactical weakness for Tesla. Now let's see how it goes. So I don't want to have super leveraged exposure to Tesla in March. Of course, April is the interesting question, right? If the inflection point happens, of course I want to be leveraged. But that will be something to decide throughout March by looking at robotaxi tracker, and all kinds of other information. So that's, in a nutshell, my big picture take on the situation on NASDAQ, on the MAX 7, on the AI bubble or not bubble. It is not a bubble. Look at Block. Look at OpenAI funding rounds, look at Anthropic funding rounds. It all goes to Nvidia. It's all driven by the greatest productivity expansion humanity has ever seen. We have the opposite of a bubble problem. This thing is too good. And in 12 months or so, we might, create all kinds of other problems, but there won't be profitability problems. With Tesla, I'm more concerned. I think the NASDAQ cannot go on much longer on that sideways and down route. It has to catch up. The forcing function becomes more and more strong for the NASDAQ to enter into rally territory. Maybe it can drag on another few weeks, maybe 4 weeks, maybe 8 weeks, but not much longer. There will come a rally. That's my take on the market. Tesla, March will be weak. April will be all decisive. April and May, either we are much higher or we might be much lower. Let's see what happens. I hope that was interesting. See you tomorrow.